Many people think that offshore investing is only for the ultra wealthy, but that's not true. Today I'm going to walk you through a 3-step plan that is going to help you get started with offshore investing. If you wanted to learn how to protect your money from economic instability, to diversify your investments, and to take advantage of global opportunities, stay tuned. Hi, my name is Yolanda. I'm a wealth advisor, and it is my goal on this platform to give you easy, actionable tips, content, and strategies that you can use to manage money well, to live abundantly, and build generational wealth. If you're new to this channel, please consider subscribing. Check out our other videos that we have on all things finance from a South African perspective. I'm also the director of Solomon Wealth Management, where I help South Africans all across South Africa, even South African expats, grow their wealth and protect their wealth. And if you want to chat with me one-on-one, please book a complimentary appointment. You can click the link in the description of where you're watching this video, or you can go to my website. It's www.solomonwealth.co.za. But before we go into this 3-step plan, let me give you some insight into why you should be investing or considering investing offshore. Firstly, if you're an investor, it's kind of risky to put all your eggs in one basket. And if that basket happens to be in South Africa, you're carrying a lot of risk. Offshore investing allows you to diversify, to spread your risk, to protect and to grow your wealth beyond the local economic challenges that South Africa is plagued with, like low growth. So here is why you should consider offshore investing. One is the diversification. Okay, you want to spread your risk across multiple markets. US, Europe, Far East, and you want to reduce the impact of the local instability that could have in the country. For example, if there's any sort of political unrest or social unrest, if your money is all tied here, all right, you are at risk. Given there are risks on the global scale as well. You also want to hedge the rand. Now the rand is super volatile, one of the most volatile currencies in the world. And one of the reasons many of my clients choose to invest offshore is because they want to shield their buying power from a weakening rand. Remember, because so much of our goods are imported into South Africa, particularly our energy costs like oil, those oil transactions, or those big bulk transactions, happen in dollars. And when the rand is topsy-turvy, when the rand is devaluing at an express rate that it is now in South Africa, the value of your buying power decreases, because that currency fluctuation is built into the fuel price and any other goods and services that are brought into the country and linked to dollars. The next thing is global opportunities. Remember that South Africa is only 1% of the global GDP. So why would you want to limit your money, your growth, your wealth building to just less than 1% and shrinking, right? You want to open your opportunities to grow your wealth, and that can happen offshore. The next thing is preservation. Like I said, currency preservation one, and also if it's one of your long-term goals to pass on a legacy, offshore and offshore solutions can help you do that, and we'll touch on that a little later on in this video. And often offshore markets offer better returns because the growth is faster. It comes with its associated risks and associated volatility. But if you want that high level growth and if you're willing to stomach the risk, offshore investing could be for you. So the first thing that you got to do to get started is, one, you need to define your goals. You don't randomly want to buy shares in some company just because it's the cool thing to do, right? You have to define what it is that you're trying to achieve with your money, and specifically with investing offshore. Remember that if you are earning and investing only in South African rands and only in the local market, you are exposed to major currency risk. Over time, the rand has lost value against the dollar. That means when all your money is tied to local currency, it loses purchasing power when the rand weakens. Offshore investing allows you to hedge against that drop. And one way you can hedge the rand is by holding stronger currencies, like the dollar and the pound, and even the euro. When you invest offshore, your South African rands are converted into hard currency, the foreign currency, dollar, euro, pounds. If the rand depreciates against these currencies, the buying power of the rand gets weaker. However, if you are holding that foreign currency, you don't take that weakening rand in your investment portfolio. It's holding its value, stronger currencies. And even when you convert those dollars back to rands, right, you're getting more money because the rand has weakened. For example, If you invest $10,000 at the rate of 18 Rand to $1, that's 180,000 Rands. If the Rand weakens, let's say to 20 Rand to the dollar, now that $10,000 is worth $200,000, right? Maybe you want to invest offshore, you want diversification, right? You don't want all your risk exposed to any political instability that might happen in the country or in the region. Investing offshore, it means your money is not just tied to one economy. And we find often South Africans are in the situation, particularly with their retirement and their pension, that they don't have enough because it's all been tied to South Africa, and specifically the weakening rand. So instead of relying on South African stocks, which is shrinking, in the early 2000s, I think we had over 1,000 shares listed on the JSE. Now, I think it's just under 600 shares. Not all of that has been bad news. You know, there's been mergers and buyouts and things like that. But your options as an investor on the JSE, it's shrinking. Are you investing offshore? You've got access to some of the best performing companies in the world. For example, like US tech stocks, major builder of wealth. European luxury brands, think Louis Vuitton, Gucci. Also, you have access to offshore global markets. Think Monaco, Dubai, New York. This means that even when the South African economy struggles, for example, it's been flat over the last decade or so, when you send money offshore, you have the ability to grow that wealth, protect from currency risk, right, and enjoy the offshore growth that's happening overseas. Maybe one of your goals is to protect from inflation. Now, I can't tell you how many clients I sit with, and they come to me at a post-retirement stage and say, hey, when we first retired, it was great. Now the money is just not enough. What can I do, right? What you should have done is started early. But if you want to protect your purchasing power in your retirement years, or at any time for that matter, and protect from inflation, economic instability, the South African rand is exposed to high inflation compared to US markets. Political risk, heavy political risk. For example, in 2022, those riots, or 2021, when those riots happened in Durban, it shook the economy here. A lot of investments are happening in Durban with the harbor, with logistics, all right? It took a major shock on the markets. Also, economic downturns can happen, and if all your assets are here, you are putting all your eggs in one basket. And a wise investor does not do that. And if you're looking for greater wealth building opportunities, offshore is where you need to be. South Africa is small compared to the global markets. We don't have major research and innovation like a Tesla or a SpaceX or DeepSeek for that matter. All right, you want to expand your horizons and get exposure to offshore to help your money grow. Instead of being limited to JS listed stocks or unit trusts or ETFs, now in South Africa you have that ability to go offshore. Invest directly into different companies' shares, or even offshore mutual funds, for example. The bottom line is that offshore means financial security and growth. And just an alert or disclaimer that the content of this video is not financial advice. Although that I am a fit and proper licensed South African financial advisor, the content that I put out in this video or any of my videos that you see is not financial advice. You shouldn't act on them. All right, you need to sit down with a financial advisor, assess your risk. Do you have the risk appetite to implement this sort of solution? All right, and you have to get specific financial advice that's unique to your situation before diving head deep into anything that I discuss here. If you're looking for financial advice, click the link in the description. I'd love to chat with you one-on-one. All right, so at that point, the first step is defining your goals. All right, and if you've nailed that down properly, then now you can start building a strategy on what it is that you want to achieve. Shield from risk, grow your wealth, whatever it is. Now you build that strategy. Now you've got to choose the right sort of offshore investment vehicles. Okay, so when it comes to offshore, I like to draw some pictures. It just helps me transfer this information to you in a far more logical manner. And I figure that a lot of people like to learn with pictures. So let me draw you a little diagram, right? You have two options in order to go offshore. Proper offshore and hard currency. All right. So on the local space, you can have your money in South Africa, right? It could be in South African rands. However, that money is tracking offshore performance. And you can have that in shares. Let's say shares. You can have that with ETFs. You can have that with unit trusts. You can even have your education funds exposed to offshore, your retirement exposed to offshore, right? Within all of these investments, endowments exposed to offshore, you have the ability and you have the safety net of a very highly regulated environment in South Africa. With your money staying in this country, staying in South African bank accounts, South African asset managers. However, the money is tracking offshore performance, right? So you don't really have that rand hedge here. You are exposed to some offshore risk and offshore performance, but your money is in here. And usually as a financial advisor with people that haven't invested offshore, we usually start off here where you get a feel for the lay of the land, whet your appetite in terms of risk and volatility. And as we build some kind of confidence in this space, right, that's the local space, tracking offshore performance, we slowly transition here. So this is hard currency, where your South African rands are, we're changing it to USD, to euro, to pounds, basically whatever hard currency you want. And in South Africa, you have something called the single discretionary allowance, where every South African is allowed to take 1 million offshore every single year. All right. If you want to take more, you have to get a tax certificate. That's something that we help you with. Very paper heavy process, right? Can take a little bit longer than expected, but you have that ability to take 10 million offshore. Right, so a married couple here can take their 1 million each plus apply for 10 million each, 22 million offshore. That's really nice. So let's say in 2010, you invested, you used your single discretionary allowance and you invested 1 million rand. At that time, the rand was 7.31 to the dollar, which gave you around $135,000, right? In 2015, if you used your single discretionary allowance and changed 1 million rand in 2015, because of the exchange rate, the value now was $64,000. And if you did it in 2025, if you use your single discretionary allowance, you change your 1 million rand, you're sitting at $54,000. So what you see is the value of 1 million rand since 2010 to 2025 has dropped drastically. Essentially, that's a 60% drop in value just because of currency fluctuation and the weakening rand. Right, so you have many investment options in South Africa in terms of going offshore. Right, you can easily use a fintech app and you can buy shares. You can buy ETFs. Again, fintech app, super easy. You can be invested in offshore property via real estate investment trust. Again, the app can do that. Or you can even go with crypto. You also have the option of mutual funds. All right, with the right kind of advisor, we can give you all of that. But one thing that you have to remember, and I think a lot of investors don't consider that, you just consider the money that you make. At any point, whether you're investing locally or offshore, one thing that you have to look at, and this is step 3, is your tax implications. Remember, shares, if you're holding it locally, have a certain tax implication. You got to know your exit. And your exit points will be when you sell your shares, when you pass away, when you divorce. All right, those are important exit points. All have different tax treatments locally and in South Africa. Same with ETFs, REITs, crypto as well. All have different tax treatments on the various exit points, and you need to understand that. Right? If you don't understand that, you don't have any business investing. Right? You're doing yourself a great disservice by not understanding the tax implications, and that's step 3 in this 3-step plan. But what I do, right, as a financial advisor is I'm going to show you an example of this, how it works. Is a very powerful thing in building offshore wealth is an endowment. These endowments allow you two things, right? And it can happen on a local and it can happen offshore. Offshore endowments are really nice because you can pay offshore bank accounts, and also you can leave beneficiaries on these endowments. So great for wealth transfer, estate planning, where you've got kids outside, grandkids outside that are standing from an estate point of view. Your offshore endowments can pay directly to them. In fact, you don't even have to attach a life to this. It can stay within a trust, an offshore trust, and be paying you and building some serious wealth, right? So these are some high-end stuff. You're going to have some good money, obviously, to invest in a good endowment. But where a lot of people play and wet their feet in is in those local endowments that are tracking offshore performance. And I'm going to show you one that's available right now for a very limited time. So this endowment is available for a limited time. This offer ends at the end of April. So if it's something that you want, yeah, so reach out. I can definitely help you set this up.